Hey everybody, how we doing out there? Doc Severson here with you. Trade School for the 21st of June 2019. Nice rally in our hands. So what I want to talk about today is a little bit different. I want to talk about what we can do to prepare for volatility in the shortcoming. And of course, I will take all your questions if you have anything else that you wanted to discuss today. So it's kind of open mic day in terms of open topics or anything else like that. Let me know, make sure that everything is working okay. So if you could give me a thumbs up and let me know that everything is good, and I will continue. Otherwise, I'm kind of talking into a bubble here. So what we need to talk about here, let's go over to the chart, and we have a very nice uptrend in play. Hey, you'll also notice something else. I was able to finally figure out the video for the to reverse the ReadySetCrypto thing. So I've got that figured out. I had to get a new driver to flip my camera to allow it to mirror. All right. Let's see, we got a few folks out there today. That's good. Let me know that everything is working. And okay. Thank you, sir. Everything. Hey, Brandon, how we doing? Okay, so we got into it a little bit yesterday in the Omnia chat room because I just saw something and I was like, okay, I got to talk about this. Because what we're seeing is, and let me get my magic pen out here. Let's see if I can get this thing to work. Give me a second here, guys. It's time for the magic pen. Okay, here we go. So what I saw here was we've had this rally and we're coming up to 10,000. Coming up to 10,000. And everybody's talking about the 10,000 level. And that's the same problem that we had at 6,500. Same thing. Everybody just assumed, right? They said 6,500. There's no way that this thing is going any higher than that. And what happened? It blew through that and didn't even give it a second chance. I mean, it just completely roasted that level. Now, what's going to happen up here? We're going to have the same thing happen at 10,000? I don't know. I don't know. I mean, I wish I did know. This is the way that TA is. We're not really predicting the future. The best thing that we can do is to prepare ourselves for what's going to happen going forward. Okay? So that's kind of the thrust of today's discussion is what should we do to prepare ourselves for the volatility? Because I think there's a good chance we see a lot of volatility this weekend. There's a number of reasons for that. First of all, it seems lately that a lot of big moves are made over the weekend. And to some degree, that may be due to the U.S. futures not being open, right? So there's no institutional effect, at least in that instrument. And there's another thing I think that there's that happens is that I think that they love to stick it to the Chicago futures because that gap that they have to deal with when the futures start trading again on Sunday night can be kind of difficult sometimes. Okay, let me catch up with everybody. Looks like we're good. Okay, so there's really three ways that we can approach this. So number one is what happens if price never gets to, so price stays below 10K. Okay, that's one way that we can look at this. The price never gets above 10,000. I'd be surprised if that happened, but again, price can do whatever it wants to do. Second way that we can look at this is that price gets slightly above 10,000. So it hits at 10,000 and then it reacts. And then I guess the third way that we can look at this is that it gets past 10,000 plus. right? It gets well past 10,000, blows past it like it doesn't even exist again. So similar to the 6,500. So this is typically what we have to do with something like this, is that you have to mentally prepare yourself. A lot of times it's very difficult to get into a volatile situation like this and just not know what's going to happen because you don't know what's going to happen, but then try to react based on your emotions that it creates. And usually what happens with this is that if you don't anticipate something, if you don't plan for how to handle something like this, you're a deer in the headlights and you're left chasing it, right? So when we got above 6,500, this happened to a lot of people. They didn't expect it. In fact, I remember having this same discussion in the Omnia room prior to 6,500. I said, what happens if it blows? Everybody's expecting it to stop there. What happens if it blows past? What will you do? And I think a lot of people didn't determine that until the price got up to there, and then they went long because they couldn't stand it any longer. And a lot of them got shaken out on this big long tail. A lot of them got shaken out on the big long tail, that big scary tail. What happened here? Markets love to do that. They love to pull you in, and then they love to shake you out. And understand that it's not just one person doing that. It's not some evil overlord sitting on top of the hill saying, I've got them now. I have you now. You know, it's not happening like that, right? Markets move because people take on too much risk. They get into a fear situation and they end up making an emotional decision. And it's not just you, it's you and a million of your friends. That's what makes the price move. Okay, so let's go into these three scenarios. Price stays below 10,000. Number one, price gets above 10,000 and reacts. And then number three, gets beyond 10,000 and moves. Okay. What's the one thing? I'll place this question out there and see what kind of responses I get. But what's the one thing that we need to watch for over the weekend? What's the one thing that we need to watch for over the weekend that will tip our hand in terms of how we should react or respect a move? What's the one thing that we need to watch for? And I'll give you a hint. It's not going to be an indicator. It's not going to be, Andrew's pitchfork. It's not going to be the Ichimoku cloud level or anything like that. It's not going to be anything to do with an indicator, which is going to be a derivative of the price and volume anyway. Okay, so Brandon is asking, is it going to be the shorts? Well, all right, so I'm going to have to take this down. So we'll take that down. Is it going to be the shorts? Well, the shorts right now are showing that they're emboldened. Now, are they at a very, very high level? So remember, back in early April, well, no. Okay, so let's go back to the level that we had at 6,500. And that was at or approximately 11 May. So let's learn something from the shorts on the 11th of May. Okay, so the move happened approximately around this point. So it blew through 6,500 at approximately this point. So yeah, they were at a short-term high right before that. So they were ripe for the picking. Now we have a lower level than that. So we're not going to have quite the same, we're unlikely to have the same kind of reaction from that. So that tells us a little bit of something, but it doesn't really completely give us the picture. Okay, that's class volume. He says volume, and I believe that. I believe that that's the actual answer here, is look for volume. Volume will tell you, volume confirms the move. So if you do see a move, if you see volume behind it, then it's got some drive behind it. So that's a combination of either shorts bailing or longs piling on, or it could be the opposite. Could be the opposite. If the price starts to pull down, we could see the shorts piling on and the longs screaming in agony, selling out. The opposite of a short squeeze. Okay, so the shorts, this is part of the answer, I believe. This is part of the answer. So right now we have a relative high in short interest right now. It's not a massive high in short interest. It's not something, let's look at this one. This was at the very beginning of December. Let's see what kind of move that we got off of there. So the beginning of December, we had an extreme relative high. So here's the beginning of December. You know, that doesn't really tell us much of anything. So we didn't get any kind of a squeeze on that. That was when we were still in a bear market. We had the shorts piling on, and then they took profits as the price went down. So that's as it should be in a bear market. Now that we're in a bull market, at least Bitcoin is, we're in a primary bull now. And somebody was asking as to whether or not we're in quiet and trending. Yeah, we're kind of in quiet and trending. It's going to be quiet and trending until you get to a larger time frame consolidation pattern or pullback. And that is what this was. So this had the effect of a weekly consolidation pattern, and then we've broken out again from that. Okay, so volume is going to help us. All right, so what we can do is we can go down to, we can look for these, look at the volume spikes. Now, one of the things that you want to look at is as the price was moving down. As the price was moving down, so we have a primary uptrend in this, and this is the 5-hour chart now. As the price was moving down, notice that generally we had declining volume. And I'm just saying generally right now, I'm just eyeballing it. I'm not putting it through any kind of a transform. Notice when the price started to rally again, we're starting to get big volume spikes in here. And this one from 10 hours ago was pretty decent as well too. We are seeing lower volume. We're not seeing the same amount of volume as when it went parabolic. This is where a lot of people were chasing it, right? Because this is where we blew through 6,500. We had a lot of people chasing it. We had a lot of people bailing out of their short positions, adding to the volume. And we had a lot of people jumping on board. I believe institutions were actually starting to jump on board too. The smart money gets on first with the first move, and that was the early April one. The second move, which was mid-May, that's when institutions say, there's the higher low, higher high, I'm in. So this could have been some institutional money coming into this, okay? I believe we also had institutional money coming into this. Retail generally gets on last. They wait until things feel good before they jump on board. All right, so watch for the volume spikes, watch for the green candles or the green volume indication versus the red volume indication. So right now, still the bulls hold, even as we approach 10,000 up here, the bulls still hold the advantage to the volume. And we can even zoom in on this a little bit more. We can look at this on the 1-hour chart. So we had a big red one showing up here recently. Okay, so that is a clue. If we start to see more of these red candles on the 1-hour chart, then perhaps there is some overhead supply. Or, you know what overhead supply is, right? Overhead supply is where people from the past that went long in the past buy in at a very high level, and then the price floor drops out and they don't sell. And they say, man, if the price can just get up to 10,000 again, you know, they drop to one knee, they make a little prayer, and they say, I swear, if the price ever gets up to 10,000 again, I'll sell out. Honestly, how many people do you think are really doing that? I don't think that we have overhead supply from, what, a year and a half ago. I don't think that's the case. So if anything, I think that we may see some selling coming into 10,000 from profit taking. Like, okay, I've been long since 6,600. There's 10,000. That's a good place to take profits and step back and see what happens. And we had 2 days of that in 2017, by the way, at the end of November. All right, let's keep drilling in. Let's go into the 12-minute chart. Let's see what kind of volume that we have coming in here. Again, big red candle that showed up. This was earlier this morning. As we got up to 99.20, we got up really close to that level, and we had some selling coming in, but notice that it's still a higher low. Notice all the way along here that we're printing higher highs, higher lows, consolidation. Look at this nice flag setting up here. Breakout, okay. Sell down, get everybody leaning. Oh no, here we go again. And now it's squeezing them out again. This is still a higher low. Still a higher low, okay? So, I mean, understanding price action, pulling back the curtain and not getting so focused on the indicators. The indicators are always going to be trailing. So I think it's a big thing for you, or it's something that I would really recommend. I hate using that word, but recommend is stick with price in this area. So when you're in the middle of a big trend like this, yeah, you can, if you're in the middle of a daily trend, you can look for signals. You can look at the RSI Laguerre or something like that and say, oh, here's a great signal. Here's a signal to go long above 8,000. So here was a nice hook, and that actually got you in right above 8,000. Nice signal. We also have the trend trading signals based on the Donchian channels. Those have been long since, oh gosh, I don't know, 8,800 or so. Those are nice, right? Although the stop is pretty deep stop right now for those. Keep that in mind. We also have exhaustion on the daily chart. So there's all kinds of technical reasons why this thing might want to take a pause up here. I don't know what's going to happen. So a lot of this is going to come down to, do we have a lot of short positions camping out above 10,000? And what you might see is for the next few hours, especially wait till the futures markets close, we might see nothing going on here until we get to maybe tonight or maybe tomorrow morning or something like that, depending on what time of, what time zone you're in, right? But maybe somewhere, 12 hours from now, we may just consolidate in this area and may camp out under 10,000. Okay, if it's a very small consolidation under 10,000, that's actually a very bullish sign. It's actually winding the spring up again. It's consolidating up in that area. It's building support for it. And more than likely, that's going to lead to some kind of breakout attempt. Now, this is what happens. So you get a breakout attempt. Is there enough volume on that breakout attempt? So we're going to have some pretty good volume on the breakout attempt, because you're going to have to convince, you're going to have an argument in price for the volume to spike up there. You're going to have the bears say, oh, no, you don't. And then the bulls say, oh, yes, I am. Right? So there's going to have to be maximum disagreement of the price to get the volume. And eventually it has to be, think of a battle getting over a castle wall, something like that. Eventually it builds up to the point where it tips over. And this is where it tips over, is where the bears finally capitulate. So watch the shorts, watch to see whether the shorts are capitulating or whether they continue to pile on as the price goes higher. So that will also be something that can help you. So again, here's the three ways that I see this happening. Is we're going to see, number one might be the price just approaches 10,000. And if it tries to spike, watch for the overthrow. Think of an overthrow as like hanging your laundry, right? So hanging your laundry over, over something like a, clothesline. That's an overthrow. So if we get an overthrow, we're going to have a quick spike above 10,000 and then a quick rejection. So the initial thrust didn't make it and it's going to get rejected. And so that to me would probably mean that we're going to be consolidating for a little bit more time. I do not believe we're going to get a move that goes like this and then an instant rejection down to 6,500. I don't think that's going to happen. I think some people dreaming about something like that, but in my experience, I rarely see that. Typically what you see before that is a rejection, another rally up to a lower high, and then you see the move down like that. So if we are going to get a move down like that, it's going to come off of a lower high. It's not going to come straight from the top and people just say, oh, I give up. Let's sell out and let's reload at 6,500. Don't see that happening unless we have a lower high first. Okay, so that's the first scenario. is we try to break above 10,000, doesn't make it, and then you see the volume. You'll notice that by the volume. The volume on the breakout will be low. Price stays below 10,000, consolidates, volume kind of tapers off, and nothing happens this weekend. That would be scenario number one. Now, what can you do to trade something like that? You could trade something like that with futures, right? If you see the attempted breakout above 10,000 and you see it gets rejected, what I would wait for is on the time frame of your signal chart. So let's say it's a 12-minute chart here. You see the rejection, wait for the lower high and the lower low. Wait for the change in polarity to come down. Don't just trade in as the price comes down under 10,000 again, because it may not be done yet. But if you see the rejection, if you see a change in polarity to a lower high, lower low, maybe you can take a short position. But keep in mind that that's still counter trend to the major, to your anchor trends. Your anchor charts are still going to be pointed higher. So this is very much a counter trend, trying to catch this thing off guard, and maybe you get a quick move down. I think it's a low probability trade, quite honestly. But it's one that you can try with a small position. And then maybe what you're going to do is you're going to trade this thing up and down underneath 10,000 for the next several days. So that might be an opportunity for you if you're a futures trader. If you're a spot trader only trying to catch swings on this, there's not going to be much meat on that bone. You're not going to see much range to trade. This is why futures, leverage futures, can be a big advantage with something like this. They're precision instruments. It's easy to get in and out. The interface is fairly quick, even though it's not a ladder, which is what I prefer, right? So that is scenario number one. So watch for the rejection, watch for the light volume on the breakout attempt above 10,000. Unsustainable, gets rejected, smacked back down. You'll see the short interest actually begin to rise after that point. Okay, number two, let's go into number two. Number two is where we have a break above 10,000 and it stays above 10,000, but not massively so. So let's pull this down. Let's go ahead and I'm going to get rid of this guy here because we don't need it. Okay, so this is going to be a break above 10,000. And you should see the volume on the break. The volume on the break should be decent. It may not be this level, but it should be decent. It should be, equivalent to some of the other breaks that we've had or changes in price. There should be disagreement. I mean, it could happen that the shorts just evaporate and just fade into the background like that and go, nah. I mean, they can do that. They can pile up the short interest and then take it off the table at the very last second. That is possible. A lot of people have a lot of complaints about that. That's what happens in the high frequency trading in the equity markets, is that you'll see the bid and offer out there. And then what'll happen is the machines are so fast that they can sort of entice the price. Hey, look at this great big offer up here. And they can entice the price to come up and try to work towards that. And then they pull it and it's gone. So I don't know that we have that necessarily happening in the crypto market. I'm sure there is to some degree. So we could have the price just sort of melt through the 10,000. Okay, so scenario two is, now this is what I want to see on scenario two. The price gets marginally above 10,000. Maybe it gets a few hundred points above that and everybody starts to celebrate. But we will see some type of retest. You'll see some type of retest of that level. Let me show you. This is, I think, a good example is to go back in time to the break when we had this break at 10,000 back in November of 2017. Notice what happened here. We started out just below 10,000, similar to where we are today. Big move up there, okay? Good volume, but notice that the volume is red. Got rejected the first time up. Okay, let's zoom in on this guy a little bit so we can see what's happening. So it's right around in this area. Got rejected, sent back home packing. But notice where the price closed on that great big high wave candle. Almost a doji, right? So it closed flat. So it wiped out everybody on both sides of the ledger. 2 days in a row, it closed flat under 10,000 in a very, very small range. That's very bullish. So if we consolidate under 10,000 with a small range, I don't care what the range of the candles is, but the closing bodies of those candles is important. It just wiped out everybody on both sides of the ledger, and they said, let's just push on through. It wiped out the bears. It wiped out the bulls that jumped on board at 10,000 and got taken underwater and throttled. The market is an equal opportunity dream crusher, and this is a good example of what I would expect to see in the next couple of days here. Eventually, it just kind of wiped out both sides and then kept on going. So this to me is like scenario 2, is study this from late November of 2017, gets above the price, and look at that, it goes all the way up to 11,400 or something like that. I mean, who wouldn't think that it's already gone? And so you get weekend bulls jumping on board there, and then this is where the bears reloaded, or this is where the profit taking started, drove it all the way down 2,000 points below that. Massive range. And this is why I'm kind of excited. If you're a futures trader, this might be an epic weekend for you. Could be. No guarantees, but this could be a huge range on both sides. So just be prepared for this. And don't get married to one side. You're going to have to be very agile to handle this. So that's number 2, is goes up, goes down, goes up, goes down, kind of wipes out both sides. Scenario 3 is what we saw in May. Gets up to 6,500, not even a wave goodbye. No chance to get on board, no pullback, brutal. If we see this, notice the volume on this too. The volume was massive, just crushed everything in its path. Now we did have one day here, the next day, where we did give back a little bit. That's okay. The next day after that, just a crushing move. Big volume. But notice how the 6,500 level didn't even stand a chance. Nobody, this is a bulldozer move. So this is option number 3. And this is option number 3 when it shows up. If you get big volume like that, don't try to be a hero. Don't try to counter trend. Wait on your signals. So let's see if we can actually go back. Let's reset this. Let's go back to mid-May, and we can look at this on a 1-hour chart. There it is. Okay. So here it is. It blows through. Here's a retracement. This is just a retracement. And you can kind of see that. Well, let's see if we can fib this one. This to me looks like probably the move here. And notice that this comes down to a 38.2 retracement, which is very normal. This is going to cause weekend bulls, new bulls to panic, because they will wait until things feel good, and they bought in way too late on this move. 38.2 retracement, just enough to smack them off. Get out of here. And this is where people waiting for the pullback and those disciplined will jump on board and take this thing to the next level. Right? So don't try to be a hero. Don't try to counter trend if you get into scenario 3. Scenario 2, you can see counter trend trading. It's going to be very whippy both directions. You're going to have to be very nimble on scenario 2. Scenario 3 is about waiting for the anchor chart trend entry to show up again on your signal chart. That's really what it is. So I could do the same thing here back on the 12-minute chart, but that'll take a while to get to. Okay, I've kind of gone through what I'm expecting this weekend. Let me know if you guys have any questions. Any questions for this or any other topics? Let me know what's on your mind. So those are the three different ways that I expect to see price move this weekend. We're either going to kind of do a weak, a really weak, lame attempt to break out and then get hauled back down in. And depending on how it consolidates at that levels, lets us know whether or not to expect more next week. But what that means is that it ain't going to happen this weekend. Number two is more of just a volatile. We'll see it break above 10,000, and then maybe by the end of the day or the next day, it gets hauled back down. But big volatility, big volume. And then number three is just a bulldozer move. Does not even turn around to say goodbye. It's just gone. And nobody gets a chance to get on board. Nobody gets on board. When you get a move like that, I should go back to the 1 hour chart. That move that we had here, nobody got a chance to get on board as it blew through 6,500. I didn't think this was going to happen until it started to happen. And then I said, well, wait a minute. I think everybody's thinking that 6,500 is going to hold this thing. What if I'm wrong? What if everybody's wrong? What if everybody thinks that this is going to hold it? So right now, I'm kind of conflicted on this thing. I see a lot of people talking about 10,000 like it's a done deal. And so some people have said, well, wait a minute. If everybody thinks that 10,000 is a done deal, does that mean that it's not going to happen? Don't know. I think there's there's more ambiguity towards this one than there was at 6,500. So which from the three scenarios would be the most likely? I wish I could tell you that. I honestly don't know. Yesterday I was of the mood that we'd probably see a bulldozer move. Scenario 3. Today, as I look around, as I survey, I don't see the number of people that I thought there were that thought that 10,000, the price would just come to a dead halt at 10,000. Right? So I think we're seeing more people making the assumption that, if it gets above 10,000, it's going to moon to 100,000, right? So there's a lot of people that are kind of 3 steps beyond this already. Their assumption is that 10,000 is a done deal. So maybe what that means is that we're more likely to see a number 2, or I should say scenario 2, not a number 2, but we'll see scenario number 2 where we'll get a lot of whippy volatility and people will get punished on both sides. That could be the most likely scenario from this. But again, that's just conjecture on my side. I don't know what's going to happen. Any other questions? Anything else that you guys want to chew the fat on before we get into this weekend? All right. While I'm waiting for that, let's look at a couple of other. What I want to make sure is that we didn't see something like, here's the BTC versus the euro. So that I think more people are actually watching the US dollar values. So I wanted to make sure that that wasn't happening. We're seeing an okay breakout on Ethereum. Ripple is still in a big consolidation pattern. Eventually this one should break. That's more of an ascending triangle version, but it still does look like a great big triangle. Litecoin, everybody's talking about the halvening. And this one looks to be, and this is where I could put up the chop index, but we're probably sitting there looking at almost max. No, not quite. Looks like we're a day or two shy of having this thing fully wound up. But this is really nice price action for stair stepping. Now, notice what we are seeing here is that every time it breaks out, it goes down first. Every time it breaks higher, it's actually going down first, and then it gets, so it's building up the bearish interest before poof, That's the way markets work, right? You've got to get people on the wrong side of the ledger and then get them to panic. That's how you get a breakout. That's how you get a breakout. And this is why I'm looking for maybe the price to come down into this area and then explode higher from it. Institutions are working on weekends now as well, or these are bots. Well, they could be bots. It doesn't really matter because the bots are programmed by human beings anyway. So they're just doing the same decisions that the people would do if they were there. All I know is that there's not going to be any institutional Chicago trading based on the CME or the CBOE futures, which is good. So it's more free. I don't believe that really people are looking at those instruments and those instruments are holding down. So just to back up for a second, the S&P 500 has been around for a long time as a U.S. index of 500 stocks, but the futures were introduced, I believe, in the latter part of the 70s, the big contract. And over time, the futures have become the actual underlying of the S&P 500. That's where the pit is. That's where they trade nearly 24 hours a day. That sets the price discovery for the S&P 500, not the main index itself. And to some degree, the spiders, things like that, also contribute to that. But it's not, derivatives are actually setting the tone for the index. Haven't actually quite got to that level with Bitcoin yet. I think if it does happen, it's going to happen perhaps through options, perhaps through some of the BitMEX activity, but it will happen through derivatives next. All right, let's see what else we have moving here. A lot of these are just consolidating. We have Binance Coin continues to show a lot of strength. Regardless of what you think of it, the market's telling you what it is. Monero has been super strong lately, right? This shows you what happens from a larger time frame consolidation. So this did the work. It built up just enough energy at the weekly chart. This is a weekly flag pattern or just horizontal consolidation, and it's breaking higher from that. But it's going to lead that breakout from a smaller time frame, in this case, the daily chart, or less than that. And let's see what else we have here. Index that shall not be named. Nothing else really. Anything else that's going against BTC is, quite honestly, sucking wind right now, just because that's in the denominator and you're never going to get anywhere trading this, trading altcoins versus a very strong BTC. Okay, no other questions. And I think that puts a wrap on for today. So thanks for hanging out with me here today on a lovely Friday, the first day of summer for us here in the Northern Hemisphere. And good to see you guys again. Good to be back again. And let's see, I think that's really it for today. So thanks for hanging out with me and going through Trade School here with Doc. Thanks, everybody. We'll see you soon.